Welcome to the Outlook for Traders Report forecast for 2018. I'm Gregg Killpack with TraderToBe.com. We saw a broad up move today in the markets with the S&P 500 closing up 21 points or 0.81% and the Nasdaq closing up over 100 points or 1.49%. Strong participation across many sectors was seen in the markets today. I read this article on Yahoo Finance today being January 2nd, 2018. Mark Zandi is the chief economist at Moody Analytics, and he talked a lot about how strong the economy is and how many jobs are being created, including the longest string of monthly job gains on record, and that we're enjoying solid growth in the number of jobs. So that's good to know, good to see. The economy is now firing on all cylinders, so to speak, compared to a couple, 3 years ago where it wasn't. It was chugging along and really not doing very well. We're finally getting to the point where we have a strong economy and we're moving forward. So that's good to know. What does that mean for traders, though? Well, when the economy gets strong, we tend to get more volatility. And that is a good thing. The very worst thing for traders is when stocks don't move. They just kind of sit there. Or the moves, when they do come, they're pretty small. So if you're a trend follower and trying to make money that way, the trends are so small they're hard to catch. And then they don't follow through. So more volatility is a good thing as long as you know how to manage the risk carefully and correctly. So volatility is a good thing. Also, the trends go further. They go for longer distances. So for trend followers, again, it's easier to make money. It's easier to catch the trend. Today was a very good example of that. You could have bought into almost any stock in different sectors and just held on for a while and made money. Because when the whole market is up broadly, it's going to bring almost everything else with it. A rising tide lifts all boats, is the saying. And even on a daily basis, that's true. Let's look at some charts and patterns that we should expect to see based on an uptrending market. So we'll likely see these in 2018. 21st Century Fox, or Fox A is the symbol. Today, it gapped up, a pretty good sized gap for this stock, about a 25-cent gap, more or less, on January 2nd, 2018, and pretty steadily up until about 11:15. It just climbed and was a steady climber and just not much of a pullback in there at all. You could have bought right into that and just held on and made a very good trade. So let's say you had 1,000 shares and you bought in right here at 35. You should have held on all the way up to about 35.75, down somewhere around here. You would have got out and made close to $750 on that one trade alone. Okay, so that's great. That's one chart pattern we should see, a gap up and a follow through. Let's look at another gap trade. Now this is Disney today. Disney gapped up and it initially had a pullback and went down, but then when the market was charging up strong, so did Disney. And that's going to happen to most stocks when the market is broad and strong going up. And about, what time was it? About 9:45, you see Disney shoot up and then follow through to the upside. Okay, so there was a nice up move there for Disney. Let's look at one more gap trade. So this is JP Morgan. JP Morgan gapped down and then went down for the first 15 minutes or so of trading after the open. And then it trended up with the rest of the market. So what you see with these three gap patterns is that it really doesn't matter if the stock gaps up or gaps down, or what it does for the first maybe 10 or 15 minutes after the gap. We want to see how it trends after that. because it could do anything after the initial gap. And in the first 10, 15 minutes of trading, you can see a lot of volatility, a lot of choppiness, and either the buyers or the sellers overcoming the other side after the initial move. Okay, so that's what you need to look for if you're trading gaps. What are some other good setups to watch for on a market that is getting more volatile and starting to trend more? Well, for one thing, some trends can be very slow and go all day. So, like, sometimes you see a trend that shoots up in the morning and that's it. It's a quick move and it's over in the blink of an eye. So, if you don't catch it just right, you missed it. Well, that's one way to do it. The other way that they sometimes do it is they trend it slowly all day. It's already gone up a pretty good ways, and you think, the trend is over, but it's still trending. I mean, it's like watching a turtle move. It's so slow. It's painful. It's so slow. But if you buy into those, they sometimes will just keep going and going and going. So just be aware of that. You can buy into a trend like that, and you're not risking much because it's moving so slowly. So it's kind of like it's even moving so slowly you can buy into that kind of trade and then, watch it out of the corner of your eye and look for other trades. So just be aware of that. Sometimes you'll think that the trend is over quickly when in fact it's not. And it will keep going and going and going. So keep an eye out on those. Now, also, you've got afternoon breakouts. Many times in the stock market, the morning session of trading is completely different from the afternoon session. It's like two entirely different trading days based on what happens. So just be aware of that. Sometimes you will see in the afternoon, regardless of if the opening in the open session was up, down, or sideways, in the afternoon, you'll see the stock start to creep up. Or it'll even have a one bar candle up move that kind of pulls back and then starts to go up again. Either way, if you see that creeping up in the afternoon, it's a good time to look to buy if the market has been in an uptrend. Those are called late day breakouts or afternoon breakouts, so look for those. Also, there are good trend following indicators like momentum indicators. This would be MACD or stochastics or RSI, and I'm sure there are a few others. Those are three of the most popular ones. But momentum indicators work a lot better when the market is trending. They don't work very well during flat markets. Okay, you need to know that. So if you are a MACD or a stochastics or some other momentum indicator user, then this will be a time where it's going to work better for you. And you can trust, how the indicator works better in these kinds of markets. Now, if you want to go back and kind of research how markets act and how stocks act in certain types of environments, you can go back and look at 97 to 99. This market is starting to look like that because the market and the economy are getting stronger than it was in the last bull market high around 2006, 2007. So I think we're going to get more like 96 to 99 type movements in the stock market. So if you want to go research how stocks moved during that time, I think that's what we're going to see in 2018 and possibly in 2019 also. So go take a look at that, do your research, and practice your strategies, and always be sure to keep and hold to your stop loss points and don't rationalize them. So I hope that helps. Now, this is a great time to be a day trader. If you want to become a day trader, you want to get into this, then check out tradertobe.com. At tradertobe.com, you can get training, you can get funded, and you can trade remotely. You don't have to move to New York City or Chicago or anywhere else. You can trade remotely from anywhere in the world, any country. All you got to do is pass the Toro Challenge. For $150, you can pass and get funded. For more information, go to tradertobe.com. This is Gregg Killpack in the Trader to Be trading forecast for 2018. I hope that helped you, and good luck in your trading.